let's talk about some of these ways that people can keep more of their dollars, right? It's not just what you make, it's what you keep. And so the conversation I had previously about cost segregation, really a form of depreciation, right? And bonus depreciation was one of the terms I learned about, right? The Tax Cut and Jobs Act, what it did to create a possibility of 100% bonus depreciation. Give me, Dawn, your perspective. I'd love to hear it. Cost segregation. Give me that high fly elevator pitch on why would cost segregation be relevant to somebody?
Well, okay, all of these incentives, and I feel like I'm a conduit for Congress and the taxpayer, because Congress gives us, when we talk about bonus depreciation, they give us these incentives as levers for them to try to have private investment move in the direction that they want it to. And real estate is always where they want private investors to put their money. They want the U.S. to continue to grow and be the best in the world, really. And real estate is huge. So when you're talking about cost segregation, you have the main crux of it is that part of your building asset is really personal property. So you should do it from that standpoint that you can depreciate things more quickly. And that in turn saves you money on your taxes because you can reduce your tax liability down to zero. But the key is that you reinvest that into another investment. And that's what they want you to do. That is the driver. That's a driver of almost all the incentives that we'll talk about today. Cost segregation is a little bit different than a lot of the other incentives just because it came out of case law, which you're familiar with that. So it really won't be overturned. It's not a single rule. It is actually the real proper way that you should be booking your building. It's just that when you first buy or build a building, you don't have that data. So you have to have a study done. So you really should do it on every piece of property. So, but when you talk about the bonus piece, that's the lever that Congress changes every year to try to, give you more incentive or less incentive. You cannot dip into that bonus piece unless you've done a cost segregation study and put some of your asset into a shorter life. So the two kind of work hand in hand. And for all intents and purposes, Congress wants you to be able to enjoy that because they want you to invest in the economy.
Let's say I'm a listener of today's Real Talk, the hottest real estate show there is in North Carolina. I've got my real estate professional status. I am so excited for this new development project that I'm going to be working on. Let's say, though, the timeline to start, Dawn, I'm just acquiring the land now, so I got about a 2-year runway before I start putting shovels in the dirt and spending dollars. I got to get a hot take from you right now. I'm not going to hold you to it, I promise, Dawn, but I got to just speculate with me here in hypothetical land for a moment. 100% bonus depreciation. Do you think it ends up getting renewed at some point in the reasonably near future?
I think that we will have bonus depreciation recharged. When you look historically at it, when it started in the 2001 or something like that, it was never 100%. It was maybe for a short period of time. It was 30, 50. I think definitely we'll go back to 50%. But it largely depends, Justin, on what the economy is looking like at the time. If they need a little bit of a thrust, they'll do it. So it's a little bit of an unknown.
They won't be scared to pull the lever, I bet, right? There's someone in that back room like, hey, this one's really ready to go. Yeah.
It's just like the Wizard of Oz. It really is.
well, and you mentioned the IRS and the way that real estate just tends to be this thing that legislators focus on, that leaders focus on as a wealth generator, as a growth module, of accelerant for the economy and for really just the success of people. And I attribute that, and I've said this in my past conversations, to the concept of family, right? Because people realize, okay, if you factor in step-up basis, right? So when I pass away and what my kids will get, and there's a lot of debate and conversation going on about that right now as well. But just that concept of family and how it can keep going forever, a physical, tangible asset, not even just shares of a company, right? But actual physical space, and how that in theory is going to last much longer than we will as individual people. I think that's why it continues to be the focus in a good way. And I think that that's good. And what we want to try to do is help educate people on the incentives of real estate and business and life. Just fun. Like, we could talk food all day. We'll find out what your favorite food is, I'm sure, at some point here tonight. So